What is going on, traders? Welcome back to the Traveling Trader, where you will always get unadulterated, unfiltered, no BS market updates and trading content. As always, we'll start with a brief market update before getting into some of the pertinent news. We'll check on the current plays that we have open before jumping into the juicy stuff, the stuff that you guys are here for, which is what trades, what stocks am I looking at right now. We're going to be taking a look at the top 5 stocks to buy now. Obviously, that comes with a little bit of detail and nuance. You can't just look at a ticker symbol, buy it at any random point in time, and expect to make money. Pay attention to the analysis and the DD. That is way more important than the ticker symbols. A lot of people, especially new traders, want to look for tickers on YouTube and they think they can just buy them. And the minute that they press the buy button, they're going to be making money. That is not how it works. Pay attention to the analysis, the DD. If it conforms with what you think about the stock, with your conviction on the stock, then great. If not, then hey, we can agree to disagree. But don't just childishly look at a ticker symbol and think that you can buy it whenever you want and that you'll make money. Pay attention to the analysis, the company itself. That is way more important than the ticker symbol itself, okay? So let us jump in right into things. All right, so in terms of what's going on in the markets at a macro scale, we got to pay attention to the US 10-year Treasury or the Treasury bond yields. These continue to drop, which is partly why the stock market continues to go up. In summary, especially for those that are new to the markets, when we see the bond yields drop, then that leads to higher stock prices, especially in traditional growth companies, which mega cap tech stocks are a part of. This is why the NASDAQ is continuing to rip day after day for the last week. Last Friday's report by the U.S. Bureau of Economic Analysis showed that American consumption increased by 4.2% in March. Americans continue to have a high appetite for durable goods. Now, you couple that with the fact that there is a limit on supply chain due to the COVID pandemic and the incessant money printing. This is obviously what's driving the inflation fears. Now, Papa J. Powell reiterated that any increase in inflation above 2% will be transitory, meaning temporary, and won't really have a detrimental effect to the economy. However, going into next year, this is when we really have to start being fearful. And part of the reason why I said that I think the Fed will be forced to at least think about raising rates next year, which could cause an imminent crash in the stock market. However, two pieces of good news is that more than 50% of U.S. consumers expected to spend extra by splurging or treating themselves, right? And we'll get into this with the stock picks. And there is an upcoming infrastructure plan that has not yet been passed. It's going back and forth between the Republicans and the Democrats in the government. So in short, I do expect the stock market to continue higher for 2021, although as we stated before, year 2 of the bull market will not be as violent as year 1. I also don't think it'll be a straight line up like we saw in 2020, but more so a choppy, gradual uptrend. There are great buy the dip situations on US indexes such as the NASDAQ, the Dow, and the S&P 500, and the index-based funds associated with those indexes. In terms of Bitcoin news, we continue our super cycle here. Watch my last Bitcoin update where I talk about how to dollar cost average effectively into Bitcoin. Fun fact, if you put $1,000 a month for the last 9 years in Bitcoin, you would have almost $62 million right now. Yes, really. Watch that video here. But Bitcoin is in a full-on crash right now from the high to the low, losing about 55% of value before bouncing up nicely. Elon Musk supposedly met with a conglomerate of North American Bitcoin miners. And as I stated in one of my Elon Bitcoin update videos, I do think that Tesla will eventually, or Elon will eventually come out with a more renewable method of mining Bitcoin, and they will start accepting Bitcoin again. And of course, Twitter is going to rejoice and you'll likely see Bitcoin's price shoot up. But regardless of all this mess, in my view, you should continue to buy the dip on Bitcoin and dollar cost average incrementally. Again, go back and watch my last video. Now, even with inflation, the chip shortage, whatnot, I still think that the theme of the recovery is rotating into value stocks and picking up cheap growth stocks on the dip. Growth stocks, I'm talking about traditional growth stocks like NASDAQ-based mega cap tech stocks. That should still be the cornerstone of your portfolio, even if you do engage in risky hyper growth stocks from time to time. Boeing, which was a reopening value stock that we called a while ago, is now breaking out nicely. Royal Caribbean hit $90 today, another stock that I said had a lot of upside. These are all recovery value plays that that we shouldn't be ignoring. Now, one of the only SPACs that I was actually recently bullish on was IPOE because it confirmed its merger with SoFi. And SoFi's results in terms of its financial results look absolutely stellar. And its growth trajectory with regards to the number of users it continues to accumulate is also impressive. There will be a vote on Thursday whether to push the merger through, and it could actually merge as early as Friday. Now, I do think that will be a sell the news event. So for those of you that are holding IPOE and you care about the short term, watch out for that likely dump after the merger happens. I will likely be leveraging this through options, whether selling a call credit spread or buying a put vertical spread. Other than that, some of the highlighted plays we have, we bought a bunch of calls on Bumble. These calls were super cheap because, as you know, Bumble's stock price tanked after the IPO. We're up almost 100% on one of them, 40% on the other, and 66% on the other. All different expiration dates. Two of them were at the 50 strike price. One of them was at the 80 strike price. And if you want access to all of our plays and be part of our wonderful community, link is in the description below. I do also have a link there for my options course where I teach how to trade options starting from zero, ending with some of the more complex option strategies that you hear me talk about on this channel. You definitely want to check that out. It's a great value if you're interested. We also bought calls on AMC. We bought the $40 calls expiring June 18th for 44 cents. And that was because of the options, the unusual options activity that I noticed here looking at the data. If you're following this absolute chaotic saga, you'll see that AMC actually did break out. Now, I also thought that AMC was a good reopening play. I called it in one of my previous reopening videos. However, this pump is obviously due to a lot of the unusual trading activity that we see driven by online forums and whatnot. Either way, it's a free market. We could take advantage of it. I noticed the unusual options activity, decided to jump on board. We made a good amount of money on this. I closed the calls already. Nvidia reports earnings this week. They're also doing a 4-for-1 stock split, which a lot of people were waiting for. I sold an Iron Condor play on Nvidia here. Let's see if it actually plays out, expecting a little bit of a drop off after earnings are reported this week since we had this pre-earnings run up. We also bought call options against the VIX. I bought the June 2nd, 2021 $21 calls on the VIX, currently up almost 3%, but you see the index is turning red today. There is some choppiness that we're expecting in the market, as I stated earlier in the video. And if we are expecting that, we want to hedge against our portfolio. A lot of people won't tell you this because they don't know how to. They don't know how to buy protective puts or buy calls on the VIX or sell calls against your shares, etc. And you have to be able to maneuver within the market with as many tools as possible. So I'm expecting the markets to remain choppy, and I don't want to lose any profits on my S&P 500 and NASDAQ based stocks in the interim. So I buy a hedge in order to make some money in case we do see a drawdown, because I don't want to sell some of those long-term holdings. We also have a cash secured put on Tesla. This is up 71%. I might close this for profit. We sold the 450 put, which is just ridiculous, on Tesla, which expires June 18th. Anytime Tesla sees a drop below $600, I sell a large number of puts at an unrealistic price, and I have not been assigned yet in over a year. So we can bank these profits and really take the free cash and go home. All right, the moment you've all been waiting for. Let's talk about the top 5 stocks to buy right now. Obviously, these aren't the only 5 stocks. I talked about a plethora of reopening plays that you cannot ignore. You want to look at those reopening plays. You want to look at those value plays. You want to look at any discounted growth stocks, especially the mega cap stocks that you've been wanting to own for a long time. So this list does not include those, okay? I'm not saying that you should ignore those. As a matter of fact, you should probably focus on those more than these 5. But I'm giving you some trade ideas here based on what's going on in the charts at the moment. So let us get right into it. All right, stock number 1 is one that we talked about just a few seconds ago or a few minutes ago, is Bumble. This is one that we made a killing on with the call options. However, just looking at the stock itself, you could see that it started trading at $70 when it IPO'd. And I believe that its real IPO price was $43 or $44, currently trading even below that. Now, Bumble did report earnings, and they actually reported surprisingly stellar earnings. They were expected to come in at a loss, and they beat earnings per share, not only reporting positive earnings, but they reported positive earnings up well above and beyond what was expected. It was over $2.90 earnings per share. It looks like it's finding interim support here. It is oversold on the RSI, and the MACD looks like it is turning positive once again. So Bumble is a good stock. It's just, what is the price that you should be paying? And I have not entered it after the IPO. I didn't enter it all the way until I started seeing it find support here. And I'm like, okay, maybe below the actual IPO price is when I should start paying attention to it. Now, if we look at tip ranks, and I will have a referral link for you on tip ranks. It won't be available when you're watching this video, but I will be adding it later and in future videos that will hopefully get you guys a great deal on this. But I love using this because it will show you all of the analyst forecasts all in one place, right? So you see Citigroup, Jefferies, BMO Capital, you see Goldman Sachs, Morgan Stanley, and you can look up this stuff for any stock, and it will tell you what the ratings from these analysts were and what their price targets were. And even on the modest hold targets, you'll see, you know, prices in the $50 range for Bumble, currently trading in the low 40s. But there aren't any sell targets here. From this price point, you see either holds or buys, and price ranges ranging from a low of $47, which is still 13% more than where the stock is currently trading now, to a high of $77, which represents an 85% upside. Anyway, I really like Bumble here for the long term. All right, stock number 2 is UMC. This stock has a ton of value, especially if we're looking in the semiconductor sector. If you're a fan of this channel, you know that I think the chip shortage is likely to be over sooner rather than later. A lot of it was due to the slowdown during the pandemic, as well as some of the bottlenecks that the pandemic represented. And there is just an army of companies that are looking to combat this, whether we're talking about Intel, Taiwan Semiconductor, obviously NVIDIA, Qualcomm, UMC, etc. So UMC is actually based out of Taiwan. What it does is actually operate a semiconductor wafer foundry. So they are looking to combat the chip shortage. They are one of the major players looking to combat the chip shortage. So if you're looking for an undervalued long-term semiconductor play, and the likes of NVIDIA and AMD seem overvalued right now, there is definitely an undervalued company in UMC. Their growth metrics look stellar all across the board. Their profit and income continue to exponentially grow. They are a net profitable company, and now they are looking to finally aggressively spend to increase the monthly capacity of wafers. So I really like UMC here for a long-term play. And guys, these are long-term plays. These are not swing trades. Please don't think that you're going to buy these and be rich tomorrow. These are all long-term plays. The third stock on the list is Coinbase. Coinbase looks to have found a support after Bitcoin and the rest of the cryptocurrency industry had tanked. However, we see Coinbase have a monster day today. And no, this is not due to Bitcoin's price rising, because Bitcoin is actually down today. But remember that Coinbase gathers most of its revenues from fees. So while it is not directly tied to the price of cryptos, obviously when cryptos are doing better, you have more participants in the market, meaning more fees for Coinbase. However, there will be a limit to how much Coinbase will draw down just due to the cryptocurrency prices alone. So we now see that Coinbase found support at around the 200 to 10 level, and we are now starting to bounce up. I do think that there's an interim price target for Coinbase at the 250 and 260 ranges, where it might trade sideways for quite a while. But if you do believe in the cryptocurrency markets being a long-standing thing, then Coinbase here, in my view, is a good buy. All right, the next stock on the list is Beyond Meat. Beyond Meat has bounced off of a over 1 year support level. You see it now breaking out above the 200-day moving average, nearing that 120 price point. Now, Beyond Meat usually rallies after bounces from these areas to around the 160, 170 range. You'll want to keep in mind that this is a volatile stock. Now, this is more of a short-term play for me. I will look to take profits at around the 160, 150 to 170 range, I'll say. They do think that earnings will vastly improve and sales will exponentially go up as the reopening takes shape, right? Because you have to remember that most of Europe is closed. Most of Europe is locked down. A lot of the US is still locked down, and they do most of their business in these two regions. They are also opening up, or they opened up, a Netherlands plant that is expected to help improve costs for distribution in Europe. They received a price target upgrade from Bernstein as well. So yes, Beyond could be looked at as a reopening stock. And the last stock that I'll talk about that is also a semiconductor play is AMAT, or Applied Materials Inc. Now this one, I think you will want to wait until it retraces because it has recently seen a nice boom off of the 100-day moving average. In the last 2 weeks, AMAT is actually up almost 22%. Now, this company does pay a dividend. They actually pay one coming up in the short term, but you will want to wait for a retracement on this one. Again, AMAT, just like UMC, AMAT is also in the semiconductor industry. It basically provides manufacturing equipment, services, and software to the semiconductor sector. It is based here in the US, has almost 25,000 employees, and it is seen as one of the frontline problem solvers against the chip shortage. Now, their billings increased by 50% in just April because, as you can imagine, a company like AMAT would be relied upon heavily in order to try and combat the chip shortage. I don't expect that to slow down anytime soon. However, as I said, AMAT, you will want to wait for a major retracement or dollar cost average on the retracements. If it does continuously test the moving averages, whether it's the 21 EMA or the 50 MA, you will want a dollar cost average here. I would not be buying AMAT here right off the bat after it increased 22% in the last week or so. But keep this one tucked in your hip pocket or on your radar in case you do want to buy a semiconductor company that is leading the charge against combating the chip shortage, pays a dividend, and is continuously reporting stellar earnings. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. If you want access to all of my plays, that link is in the description. Consider signing up for the options course if you are confused by options or would like a little bit more clarity in some of the plays that I talk about. That link is also in the description. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.